So here's a fantastic piece on what's going on with China. It really just summarizes some of the things. So I saved this on the larger iPad here, and let's go through it together here and add some commentary too. So a good summary on China. China's slow stimulus rollout has added to concerns about the weakening economy and fueling a debate about how far authorities will go to bolster growth. Keep in mind, China has been an economy that's been growing for what 8% for probably the last 20 years, and growth estimates now have fallen to about 5%. However, starting about 3 months ago, I indicated, like, well, about 6 or 7 months ago, I said, I don't think this reopening wave in China is really going to be that inflationary of an impetus. I don't think just because the economy reopens in China, we're going to have this massive inflation and this massive surge of oil prices. China's economy has been open for a very long time, and we haven't had massive supply shortages just simply because China's economy is open. And a lot of that played out. We didn't end up getting an inflationary impetus again in China. What you got was a lot of service spending. You got people spending money on local travel, local air travel, local hotels. You didn't actually get as much international as you expected. You did see the high end enjoy some of the reopening, such as your sort of Louis Vuitton level. But beyond that, you really saw that services rally, that reopening rally. A, not produce an oil shock that is upwards. B, not produce an inflationary shock. And C, it faded. That consumer spending was pretty tentative. And part of that we could have expected because going into it, we knew that the regular Chinese consumer, the average Chinese person in China, had about 1/12 of the stimulus money in receipts that we had. So I think the measure was somewhere around an American on average received about $6,000 in stimulus, whereas the average Chinese received about $500. And so that money was very fleeting. And we weren't expecting inflation, which we didn't get. Instead, what we got was flatness and this idea that, okay, maybe the economy will grow at 5%. But even ideas that the Chinese economy will grow at 5% are starting to come into question. Now, I have the expectation that Chinese growth will probably be revised down to closer to 3%, short of some kind of larger stimulative efforts from China. And I actually think it's one of the reasons over the last 6 months we've seen a lot of what I like to call cry for help from China. This isn't to be confused with like the nonsense of around the Chinese spy balloon, which maybe I shouldn't call it nonsense because I'm not trying to impose like a political opinion on it. What I'm just trying to say is ignore the Chinese spy balloon for a moment. Take that out of issues over the last 6, 7 months, whether it was intentional, which it very well likely was, or it was an accident, which obviously there's a possibility of that as well. Call it two-thirds, one-third, or whatever. What's important to know is China has really been scrambling to beg companies not to leave to India. You've got somewhere around 22% of companies wanting to leave China versus the historical average of around 15 to 17%. This is a problem for China. China obviously knows it is a massive manufacturing hub. It is, and we all know that when a factory comes to an area, you boost housing, you boost dental services, restaurant services, food truck services, doctor services, accounting services, you name it. You boost everything in an area when you introduce a factory to that area. It's fantastic for the economy. Obviously there are environmental questions that would also be something important to pay attention to. But in terms of per capita GDP and incomes in an area, they go up. And so, as part of China's sort of reopening, what was really fascinating is if you really paid attention to what the Chinese Party Congress told us, they told us, we love capitalism. But we still like socialism, but boy, we love capitalism. And what they did over the next 6 months is they really put Tesla on a pedestal, even though there was drama, and there always is drama about Tesla in China. For example, you had a death at the Giga Shanghai. China put Tesla on a pedestal. They wanted to show the world, look at what we did with a company like Tesla. Look at how they came to us and made the most productive, most efficient, and best factory in the world. Look at the problems they have trying to build in Texas or in Germany or whatever when they could just build in China. And look how easy we made it for them. And so they really put Tesla on a pedestal. And this is really important because it tells us that China has really been trying to uh, reveal its sex appeal, so to speak. And I think that's why Secretary of State Blinken had such a phenomenal visit to China over this last weekend. Blinken visited China, and it was probably one of as some argue, the most successful visits of an American, really, by an American official to China in a very long period of time. And part of this could be because, frankly, China is like, please, we need any positive publicity we can get because any positive publicity we could get would potentially be stimulative without us having to actually stimulate. And so I think that's really what China is hoping for. And as a result of this, you have this piece here from Bloomberg. So let's continue with the piece because I basically went on like a 4 minute tangent there, catching you up to speed. So, following investors were primed for the State Council, China's cabinet, to possibly announce new support measures for the economy after a meeting on Friday. Market expectations were especially heightened after the central bank's surprise interest rate cut last week, which economists said signaled a looser monetary policy. So, in other words, you had a surprise cut last week, and then the thought was, okay, well, if we're going to be in this element of maybe surprising us with rate cuts, then surely there are going to end up being some kind of, dare we say, direct payments to individuals like stimmy checks or businesses that are really going to prop up the economy again, right? Well, the state council stopped short of releasing any specific proposals rather than after their small little rage cat. We ended up getting information like the government is studying new measures that will be adopted in a quote timely manner. And this really led to some concerns that maybe stimulus isn't even close. And there's this idea that, here are some economists who are calling for it like this quote, we should not hesitate to add more forceful policies where they are needed, is an argument made by some economists here. Some others suggest it's sort of like squeezing the leftover toothpaste from a toothpaste tube, and everybody's sort of waiting for that last little bit of toothpaste to come out. Just kind of weird because it sort of suggests that, like, okay, well, like, if the toothpaste tube is empty, at some point you're gonna realize, like, uh-oh, the amount of growth in China is going to be limited. I believe this actually. I do think that does create some risks for companies with exposure to China. Unfortunately, any big tech name that has been doing well over the last 6 months does have some pretty solid exposure to China. So, for example, you look at Apple, you look at Nvidia or AMD, for example, 20%, 20 to 25% of their sales going to China. You've got Tesla, somewhere around 20, 25% of their sales going to China. These are potentially Chinese sales, and a lack of stimulus in China could weigh on revenues for a lot of these companies. So I think this Chinese stimulus matters more than a lot of us really think, because I think sometimes we hear, "Oh, okay, whatever, China's not stimulating. What do I care if the Chinese get stimulus checks?" But it really does trickle back to our stock market at home. The State Council, which coordinates policy among central government ministries and the central bank, called for more forceful policies, but again, no time frame. The threshold for stimulus is now higher, whereas during COVID, you had a more flooding of the economy. Now, all of a sudden, you have Z sticking to a push for higher quality growth rather than that sort of stimulative check growth. You do have more talk about real estate easing. They've obviously loosened lending standards for real estate a lot to really try to prop up or put a floor under the pain that you've had for the real estate sector. But really, if you look at a sort of chart here, and I'll showcase this in just a moment here. But if you look at a chart of Chinese stimulative support this year compared to other years, and you kind of look at it as just a line. The higher the line, the more support. Here it is in my hands, and you can kind of see it on screen now. You can see that we are at the lowest part. Furthest away from my head over there is Q2 2023, and we're pretty low on stimulative efforts. You got some stimulus going obviously into the COVID lockdowns here. You got a little bit of some surges of stimulus again when you were looking at the Delta variant when it hit China first, or Omicron. But really, other than that, and then maybe a little bit of a blast when you had the reopening. But outside of that, oh boy, stimulus in China lately here has been very, very weak. And again, maybe that's a good thing. It's like, hey, let's actually build a strong economy rather than just one propped up on stimmy checks. Probably a good thing. But that is potentially going to create some short term pressure on revenues from China. Goldman economists don't expect the central government to issue special sovereign bonds, the tools used before, whatever. A government is also unlikely to launch another round of shantytown redevelopment like it did in 2015. And then you could sort of have this idea of, well, the Bloomberg piece going into these various different ideas around potential versions of Chinese stimulus. Chinese stimulus. What is worth noting is China is not the kind of country that really enjoys showering its constituents with checks, mostly because, I mean, well, I shouldn't say mostly because, but potentially because in China, you don't actually have to shower your citizens with stimulus checks to win elections. You just win elections because you're in control. So, unfortunately, both not fantastic. But I will say, I do think that these positive relations between Blinken and the United States over the weekend will end up fostering oopsies, longer term and stronger growth between China and the United States. I think you have a lower risk of a war between the United States and, let's say, with Taiwan and China. And I think you have a greater risk of really just a much slower growing China. Now, some implications of this, of course, beyond just the potential impact to Chinese revenues for growth companies or companies exposed to China, another implication of this could be really inflation. There's this expectation that if you uh, have China as a global anchor to inflation, maybe inflation will ultimately end up falling faster than people anticipate, which obviously is a good and would likely be seen as a good in much of the United States. However, if that's coupled with earnings misses, well then you kind of walk into the Mike Wilson territory of Morgan Stanley, which it's funny because Mike Wilson isn't even using China yet as a reason for why we might have an earnings recession, though quite frankly he should, because I think that would be his better argument rather than some of the arguments he's been making. So we'll see. But when it comes to China, obviously things slowing down. I do not expect a 5 to 5.4% GDP, which is a large expectation that a lot of folks have right now. I think it'll realistically end up falling, certainly in the fours, if not even lower than that, and that will have some implications to growth. And so I would just be mindful of which of the companies you're investing in have exposure to China. I know a lot of people are trying to make the argument that, oh well, China's at a bottom. It's time to really invest in China now. The time is now. If the Chinese stocks are at the bottom, I would caution that because I don't know that anybody really knows where the Chinese bottom, so to speak, in an earnings recession is. So keep that in mind when it comes to China. Steve just mentioned Blinken said the U.S. does not recognize Taiwan independence. I thought they did previously. Is this a flip flop? So you have to be careful here. There are individual commentary that you get, and then there's the official policy of the United States. We have to be clear. The official policy of the United States has not changed. The official policy of the United States follows the one China policy. One China. Okay, that is Taiwan, China, same thing. That is the official on the books policy. And when they cozy up and they have their meetings and their dinners and they go on a walk together, which is actually exactly what Blinken did. They had like a 2-hour working dinner and they went on a walk together and whatever. A lot of this is for cameras, obviously, but they, it is important as well. They have to start off the dialogue with, hey, we just want to be clear. We still have an official policy that is called the One China policy. And they reiterate that policy because Taiwan already knows about that policy. And so, on one hand, you have to kind of picture it like this. Don't worry, Taiwan. We're just gonna tell them we still on paper have that one Taiwan, one China policy. Okay, don't worry. Just gonna go over here and talk manufacturing and economy." And Taiwan's like, uh, "We don't like this, but we can't do anything anyway." And then China's like, "Okay, now that we are clear that there's only one China, let's talk business." So it's kind of like you have to get the bullshit out of the way and you get the optics out of the way, and then you can actually really talk business. So, in my opinion, this not recognizing Taiwanese independence, the United States never has. They purposefully make this confusing because it's called politics for a reason. It's supposed to be BS. I mean, think about like okay, I'm not trying to go down this rabbit hole, but just to give you an example, Fauci says we didn't do gain of function research. Okay, maybe we didn't do gain of function research at the Wuhan lab in China or otherwise, right? But we did sponsor and financially support directed evolution, which is just another definition of nearly the same thing. Directed evolution is sort of like taking a group of monkeys and then infecting them with COVID, let's say, or some other virus, and then taking the most infectious of that batch and infecting a new group of monkeys, and then of that batch taking the most infectious and infecting the next batch, and you do this dozens of times to try to study the most virulent viruses. I mean, when COVID first hit, it was much more powerful than it is today. People, regular normal people, were just dying way before the vaccines. I mean, you had people in their 30s and 40s dying. Children obviously much less so. But the point is, that was a very, very powerful virus when it first hit. Even Delta to some extent, it's relatively weak today. But the point of that is, again, let's get away from like vaccines and COVID and all this stuff. The point of that is to say the government has tools to mislead us so that way they can, on one hand, say, no, we don't do that. Then they just have a different definition. So it's like, of course, the United States supports Taiwan. And of course, when they're visiting Taiwan, they're like, we'll defend you if you're ever invaded. Uh, and then when they visit China, they're like, we have an official policy on paper that says there's only one China. Okay, let's get to business. So it's all politics. It's all bullshit. But to some extent, all the politic BS theater is designed to keep everyone happy and just focused on spending money at your shopping mall or whatever to just keep you a happy working American. It's all kind of part of the game. Anyway, okay, so that gives you some deeper, I hope, perspective into China. If you like my perspectives, as always, check out the programs on Building Your Wealth, linked down below. All right, China piece done. Let's now jump on over and see if good old CNBC has any commentary. We do have another Mike Wilson piece that came out, a little more detailed today, although still a little scrappy. So stay tuned. We'll be covering that. First, I want to see what kind of commentary we have going on over at the CNBCs. Probably is going to take me just a moment to grab that here. Looking at some of this other commentary, Intel had to deal with her. Intel's been announcing deals like crazy. So if you didn't notice, Intel also had this massive deal with Israel that was announced. And I mean, you're talking about a $25 billion facility that was announced. And I believe Intel expects probably somewhere around 15% in subsidies and some massive tax breaks over there relative to the corporate taxes they pay in America. And really, what this is it's Intel going all in on Intel 2.0, which is really the foundry, division. Yes, yes, yes. Died suddenly is a reference to vaccines. I know, I know. All right. So anyway, let's and that is different from what you had before died suddenly, like because there were no COVID vaccines when there were no COVID vaccines. Anyway, let's listen to CNBC.